Let's imagine a scenario where you finally had an offer accepted on that beautiful property you've been eyeing. You and your realtor have navigated all the negotiations. You've ended up on top. Now, all you got to do is bring her home, get that mortgage in place. But that's not a big deal. You've got your pre-approval from the bank or your broker, only to discover that what you thought you had for a mortgage isn't exactly as it seems. It is a nightmare scenario, puts you between a rock and a hard place, and it happens way more often than you think. In this video, I'm gonna share with you 3 red flags that you should look out for to avoid being massively disappointed when you go home shopping. But first, a quick introduction. My name is Chris Mulder. I am a second generation mortgage broker here in Toronto, sometimes referred to as the son of a broker or SOB. I was lucky enough to learn the mortgage business from my father, Arnold, whose career extended over 40 years. And my hope with these videos is that I'm able to pass along some of that knowledge, some of that experience so that you can be a better mortgage shopper. The first red flag is unrealistic expectations around your maximum mortgage budget. Out of all the red flags, this is the one that keeps me up most at night. This is where bankers or brokers set expectations about what you can qualify for. You go out to the market shopping, trusting what guidance they're giving you, and then when you come back, you find out that you weren't in fact qualified for that mortgage amount. Now, how can that possibly be? I mean, you should be able to trust what your banker or broker tells you. They're the experts, right? Well, it's like this. The banks and lenders have policies that they set up, which are guardrails to determine exactly how much a borrower can qualify for. We typically refer to this as the debt to income ratio. So it takes a look at how much income you have versus how much liability or debt you have and comes up with a number to determine what your max mortgage budget is. However, not everything is black and white when it comes to mortgages. And there are times where on exception, a borrower can qualify for more than what those policy guidelines are. And what ends up happening is brokers or bankers will tell a borrower that they're qualified for a higher amount, which is based on an exception, without actually getting that exception up front. Because it's typically not the broker or the bank rep that you're speaking with who actually makes that exception. It's a credit manager, and credit managers don't look at your application until the time that you actually make an offer on a property. And so there's a real danger there. If an assumption was made that you were going to qualify for X and you went out and did your shopping based on that assumption, and then you come back and you don't qualify or the exception isn't granted, it is a disaster. Now, how do you avoid this snafu? Well, one quick and easy way is to use a mortgage app. There are all kinds of free apps, including our Home Center app, which is completely free for you to download. And included in the tools is a mortgage pre-qualification that allows you to get a certificate. And you can run those numbers to see if they are in line with what your bank has pre-approved you for. If the numbers are completely off, then you definitely want to double check with your banker or broker that you are in fact pre-qualified for the amount that they've indicated to you. And in case you're interested, and I highly recommend it, I included a link in the description to download the Home Center app. It's very intuitive to use, completely free and completely anonymous. So use it with confidence. The second red flag is false rate promises. Listen, everybody wants a low interest rate. Bankers, brokers, we all know that. So we use the oldest trick in the book to advertise our lowest interest rate. But the reality is once you call to inquire, there are very specific terms and conditions to qualify for that rate. Shopping for a mortgage interest rate is not easy. And the reason is because the market is very fragmented and it mystifies shoppers. Just as an example, here's one of our lenders' rate sheets, and it shows, I don't know how many different 5-year fixed, 6 or 7 different 5-year fixed rates that apply for very specific scenarios. I have other videos in my series about how to negotiate the lowest mortgage interest rate in Canada. That's not the focus of this video, but I do want to raise this as a concern that when it comes to interest rates, that you're having an open and frank discussion and proper expectations are being set around what rate you're actually going to end up with once the rubber meets the pavement. And finally, red flag number 3, inexperienced and unresponsive mortgage reps. When you walk into a branch or call an online mortgage brokerage, you do not know who's going to answer that call on the other end and become your mortgage rep. If you're lucky, you get a seasoned veteran who has all the battle scars and experience to go with it to be able to navigate you effectively and proficiently and address all the concerns that might come up during a mortgage transaction. And if you're so lucky, then it's a piece of cake. It's a walk in the park. You won't even know that there was turbulence or that there were issues. However, if you're not so lucky and you get someone inexperienced, it can be a rotten experience. They can lead you astray. It can be one issue after another, and it'll be a zigzaggy road to get to the final destination if in fact you do get there at all. This is where referrals and reviews come in handy. Talk to your friends, talk to your family, learn who in your circle has worked with somebody that's great, either at the bank or a mortgage broker, and take a look at the reviews. I'm gonna put in a shameless plug here for Tridac Mortgage, my brokerage. You can see when you look at the Google reviews, there are 200 Google reviews. They're all honest, they're all real. It's something I'm really proud of. And I'm not saying that you have to work with me, but you should find someone like me that has this type of experience and these types of reviews. There are a lot of great brokers and mortgage agents and bankers out there. So please do your homework. And the last comment here on this third red flag is don't deal with unresponsive mortgage reps. If you're not getting the attention that you think you deserve, if you're not getting your calls returned or emails returned, then dump that agent. It's not worth it. Listen, as a client, you are the lifeblood of our business, and it's important to keep you happy every step along the way, and you deserve that. So keep that in mind. Don't tolerate unresponsive mortgage reps. And there you have it, folks. The 3 mortgage red flags to keep in mind when you head out into that mortgage wilderness. So the next time you're shopping for a mortgage, keep your wits about you. Remember these red flags. If you enjoyed uncovering today's content with me, please consider giving me a like, leave your comment, and be sure to subscribe for more mortgage fun in the future. Until next time, happy house hunting, and may the mortgage odds forever be in your favor.